All right, let's dive straight into it. Welcome to this explainer where we are breaking down the HDFC Bank Millennia Prepaid card. Look, if you're a budget-conscious millennial wanting the thrill of cashback without the massive debt traps of a traditional credit line, you are absolutely in the right place. We're going to strip away the marketing, look strictly at the data, the true costs, and the mathematical return on investment to see if this piece of plastic actually deserves a spot in your wallet.
Here is our game plan for today. First, we'll meet the Millennia Prepaid. Second, we'll dive into the fees and usage costs. Third, we'll break down earning and redeeming cashback. Fourth, we'll look at eligibility and management. And fifth, we'll wrap up with our final verdict on the pros and cons.
Okay, Section 1. Meet the Millennia Prepaid. Let's get our first impressions.
To start, we need to clarify exactly what this financial product is, because it is fundamentally different from a traditional credit card. A prepaid card is exactly what it sounds like, a financial instrument you load with your own money in advance. Because you are spending your own loaded funds, you get brilliant, strict budgeting control. There is zero credit line here, and you know what that means? Absolute zero risk of falling into debt or getting hit with crazy interest charges. Think of it like a modern digital envelope system for your daily spending.
Now, right off the bat, HDFC gives you an immediate incentive to start using it. If you hit the milestone target of loading 5,000 rupees or more onto the card, you unlock an activation gift of 200 rupees cashback. And the best part? You get this every single year you hit that load requirement. Just a quick heads up though, this cashback is processed within 90 working days, so you definitely won't be seeing it overnight.
What's really cool about this prepaid model is the built-in security. You get universal acceptance across India anywhere MasterCard is swiped. Plus, you get zero-loss card liability, meaning you are totally protected against unauthorized transactions the second you report it stolen and block it. Oh, and it even includes personal accidental insurance. You just have to make sure you use the card for shopping at least once every 30 days to keep that insurance active.
Moving right along to Section 2, fees and usage costs. Let's look at the real numbers.
All right, let's get to the most critical part of our ROI equation. The primary cost here is pretty straightforward. You're looking at an explicit joining fee of 499 rupees plus an 18% government tax. And every following year, you face an identical renewal fee of 499 rupees plus tax. So your absolute baseline cost just to hold this card is roughly 588 rupees annually. Keep that specific number in the back of your mind as we evaluate the rewards later.
Now, massive red flag here, guys. You must be incredibly cautious with ATM access. If you treat this like a standard debit card to pull out cash, the fees will absolutely eat you alive. Withdrawals up to 1,000 rupees hit you with a flat 20 rupees plus GST fee. Anything above 1,000 rupees, that costs a steep 1.85% of your withdrawal amount. Literally, even just checking your balance at an ATM costs you 10 rupees plus tax. The big takeaway? Use this strictly for digital and card shopping, not for pulling cash.
The bank also imposes some pretty strict limits on cash flow. While they allow a very generous maximum balance of up to 2 lakh rupees on the card at any time, point-of-sale physical cash withdrawals are firmly capped. You can only pull 2,000 rupees per transaction, 5,000 rupees a day, and 10,000 rupees a month. Again, this just reinforces that this is a digital shopping tool, not a limitless cash access vehicle.
Let's jump into Section 3, earning and redeeming cashback. Time to maximize those returns.
Now that we know the costs, let's talk about the fun part, the benefits. The base earning rates are actually surprisingly competitive for a prepaid product. You get a highly accelerated 5% cashback when you shop via HDFC's PayZapp and SmartBuy platforms. General online shopping earns a really solid 2.5%, and your everyday offline shopping at physical stores, along with wallet reloads, earns a baseline of 1% cashback.
But of course, you have to play by the rules. Keep in mind the strict exclusions right alongside these rates. A transaction has to be at least 200 rupees to earn absolutely anything. So if you buy 150 rupee coffee, yeah, you get zero. Furthermore, while offline wallet reloads might earn 1%, there is a specific rule stating you cannot earn any cashback for loading other prepaid cards or certain digital wallets. You really need genuine retail spends to see return.
And here is the great equalizer, the absolute game changer you need to know. No matter how much you spend or how strategically you game those 5% multipliers, your maximum monthly cashback is strictly capped at just 400 rupees. That's it. If you spend 8,000 rupees on SmartBuy at 5%, you've hit your cap for the month. Any spending beyond that earns you absolutely nothing. So,
How do you actually get this money? Well, the redemption process requires a little bit of patience. It can take up to 90 working days for your valid transactions to process into cashback. But once they clear, it's super easy. You can just view and redeem your accumulated rewards via a single click inside HDFC's net banking portal.
Let's bring all this math together to find our true ROI. That $400 monthly cap means your absolute maximum yearly cashback potential is $4,800. Add in that $200 annual welcome benefit we talked about, and you hit a hard ceiling of exactly $5,000 maximum yearly cashback. So, if you completely max out the card every month, you clear just over $4,000 in net positive value against those $588 in annual fees and taxes.
Section 4. Eligibility and Management. Let's see who actually qualifies.
Unlike premium credit cards that want to see massive income thresholds, the barrier to entry here is delightfully low. Honestly, basically everyone is eligible to apply. You just need to visit an HDFC branch and hand over a standard officially valid document. So your basic ID and address proof like a passport, driving license, voter ID, or Aadhaar card. It is that simple.
Once you're approved, it's super low maintenance. You get a nice long 5-year card validity, so you aren't constantly swapping out expired plastic. It comes with free SMS alerts for every transaction to keep things secure, and a unified net banking interface. From there, you can effortlessly track your spends, check balances for free, and update demographic details using a quick mobile text OTP.
And finally, Section 5, our final verdict on the pros and cons.
It's a real balancing act, guys. On one side, you have some genuinely great features. Up to 5% cashback, zero liability protection, ultimate budgeting control since you can't go into debt, and solid free insurance perks. But on the flip side, you have to weigh those unavoidable $499 annual fees, that highly limiting $400 monthly cashback cap, the punishing ATM charges, and the simple fact that a prepaid card does absolutely nothing to build your credit score.
Ultimately, it leaves us with this one big question to ponder. Does the peace of mind of a prepaid, debt-free budgeting tool justify the annual fees for your specific financial lifestyle? Or if you're a disciplined spender, are your daily expenses better suited for a traditional entry-level credit card that actually builds your credit history without those strict reward caps? Run the numbers for yourself based on what we've learned today and make the choice that maximizes your own personal ROI.